Hi everyone, welcome to another edition of Big Business Blueprint live interviews, where we speak with one business leader and understand their personal and startup growth playbook, fundraising lessons, products and services they offer, and how they think about their market expansion, customer acquisition, retention, also more importantly, attracting talent and building a tight knit workforce in this day of AI, and so on. I'm Bhuva Shakti, based in New York, the founder of WalletMax. We are a global community of startups, investors, executives focused on increasing sustainable funding access, especially in climate tech, fintech, deep tech, and AI sectors. If you are a fintech, tech, AI, or sustainability focused startup from any industry, don't miss out the fundraising event from WalletMax. We have startup pitch competitions and investor panel discussions. It's on September 18th as part of New York Climate Week. The tickets are now live. You can see the Luma registration link scrolling below in the screen. Now, in my startup growth playbook interviews, the one we are in today, I typically invite a startup founder or a co founder and interview them about their growth lessons. But more importantly, what differentiates them from the crowd? How do they prioritize impact along with profits and people? We deep dive into their personal, professional, and startup journeys and their mission to uplift. Today, we are speaking with Adnan Haider, co founder of Quantuma. His expertise spans advanced analytics and fintech product development. Previously, he was SVP of Analytics at Zafin, where he built the banking data fabric that powers pricing for 30 million plus customers. Before that, he led advanced analytics at IBM Canada. Adnan serves on the board of advisors for the University of Toronto's Master of Management Analytics program, where he also teaches product management. Quantuma is the deal intelligent platform for commercial banking that gives sales teams new visibility to discover and grow commercial relationships. So let's get started. Thanks for joining us, Adnan, today.
Thanks, Bhuva. Very happy to be here.
Thank you. So, to get started, I want to learn a little bit more about your background and journey towards launching Quantuma. Tell us a little bit.
Oh, absolutely. So, right before I started this company, I was with a fintech unicorn called Zafin. And Zafin makes product pricing software for banks. It's a market leader in its space. It was a really amazing experience to be there. And before that, I was with IBM in their advanced analytics practice, primarily building advanced analytics products for financial services and the energy sector. And both those experiences, in their own way, led to where I am right now, which is starting this really high impact company in the commercial banking space.
Yeah, and you worked across different sectors already. So, you worked at IBM in the energy sector, Zafin as a fintech. In the academia, you're doing analytics and product management, but now you're a co founder, right? So, what has been the biggest shift moving from corporate leadership to startup co founder?
It's a pretty dramatic shift, to be honest, because when you're on the other side, when you have a corporate job and you're doing product development and in the context of a larger company, or even in the context of a late stage venture backed company, it's you think you have you think the lessons that you've learned are going to transfer over very nicely to startup land. And actually, in my experience, that's not that's not really the case,
Yeah.
because startup challenges are uniquely different from definitely different from a large enterprise, but also different from a late stage a venture backed company. Because when we in a startup, everything becomes your problem. In this case, my my co-founder's problem. And that's the biggest mind shift, right? Because um, from recruitment to customer acquisition, to dealing with the billing inquiries from like the cloud provider, and the list goes on and on. So the biggest mind shift is that you suddenly don't have anyone to say that, oh, um, can you help me prepare this paperwork, or I want to hire an engineer, can you just put out the recruitment a requisition for it? None of that actually happens. It's like you're on your own, which is exciting, but it's also a substantial shift in ways of working.
Yeah, I mean, I can relate to it quite a bit. I was working on Wall Street in the investment banking sector, and now I run Wallet Max. So obviously, it's a community, but also it's a startup for me while I'm being an investor, right? So you cannot apply the same principles, but sometimes people think from enterprise you can probably do a little bit of it because this is a smaller enterprise, but then you tend to do more of it, right? And you have to learn few things from
it's a
scratch.
it's a very different set of skills. So the first is exactly what we're talking about, that everything becomes your problem, which is
Yeah.
exciting and and stressful at the same time. And the second big difference is that it's acquiring customers and recruitment. When you have a logo, an established logo behind you,
Mm.
it's dramatically different from having a 0 to 1 startup and actually convincing companies in particular, but also top talent, to work with you. I think that's like another major shift that you only really find out. I mean, in first principle spaces, everybody knows that it's true, but you only really find out when you take the plunge and you do it yourself.
Yeah, yeah, no, definitely couldn't agree more because even for me, I do partnership and other sponsor outreach and things like that. A logo versus not a logo makes a huge difference.
Yeah, absolutely.
Yeah, yeah. So now, when you look back on your career, what specific experience, if there are one or two examples, that you think most shaped how you think about product data and customer value today?
This there was a product that I was building at IBM,
Mm,
which was it was a real-time analytics product for the industrial sector. And one of my really formative experiences in product development, especially analytics product development, came from my time in that product team, because this was an advanced analytics product. We were working very closely with IBM Research, which does some really impressive cutting edge work. And the problem that we were solving was, we were ingesting data from hundreds of thousands of sensors. This is real time data, so
mm,
the scale of the data was large, and also the velocity of the data was actually pretty fast because it's real time data. And the premise was that we had to find product optimization opportunities in terms of, can we improve the output of the industrial process. um, that was the problem statement, and it was a really exciting problem to work on at the time. But what I realized was that um, there is a lot of math and tech that you can throw at the problem. In this case, because we had a large data set, we had the best data science researchers available from one of the best research labs, which is the IBM lab in Yorktown, upstate New York.
mhm,
And so we were trying all kinds of these different algorithms, especially deep learning algorithms like LSTMs and others, to solve a problem, right? And it was exciting to do. There were research papers that came out of the approach that we had. It was really promising. But the the solution, that the feature that actually moved the needle for the customer, was the simplest model. And in this case, the model was actually almost entirely deterministic, right? There was a certain set of
mm.
rules that we identified by interviewing the domain experts, and just being able to apply those rules on real-time data, which is technically not that hard, is what actually created the first unlock for us on that project. So the kind of the lesson that I learned there was that it's often the simplest solutions that provide customer value, and and we need to kind of do those first to get permission to do more advanced work, which may be more ambitious in nature.
Yeah, exactly. I mean, focusing on the customer and solving the problem at hand is the most important thing. And if it happens to be a simple solution, then much more easier, right? So
Yeah,
trying to focus on the solution versus
yeah,
anything else is really important.
yeah.
Today, yeah,
That's exactly it. Focusing on what the business objective is and the actual problem that the customer is facing. If you work backwards from there, then it's the simplest. Often, it's the simplest solutions that solve the problem.
yeah, yeah, exactly, exactly. Now you're trying to solve a problem for commercial banks. Is there a specific moment in your life, in your career journey, that you thought, okay, they have a problem that's worth building a company around?
Yeah, absolutely. So, in my prior role, I was doing a fair bit of work across retail and commercial banking,
Mm,
and what I noticed in commercial banking in particular was that relationship managers in commercial banks, they they have a quite a difficult job actually, right? Because one relationship manager has manages maybe 50 relationships,
mm,
maybe up to 300 relationships, depending on the size of the customers that they deal with. And it's it's a hard job because there are a lot of different systems they have to use at the bank, right? They have the data at a bank is actually spread across many different systems, and the irony is that that's just the bank's data. There is a lot of external data that they don't even know about what's actually
mm,
happening with the business. Did they when How are their what are their revenues looking like? Have they made any acquisitions recently? When was their last funding announcement? This is not even in the bank's systems. You have to actually look externally for this, and much of this work was actually manual, right?
mm,
What the end result of this was that the number of customers they're expected to serve had been expanding, and as but their technology enablement was actually pretty stagnant, right? So they had to do much of the work manually, and they had to rely on workflows that haven't changed in decades. That, hey, I want to just talk to my customer once every 6 months or once every year and actually understand what's happening for them. In the meanwhile, and this is not only did I see this in my work, I also saw this as a small business owner. In the I was work the my bank account was with a major bank here, and
okay.
here in Canada. And the kind of service that I got from the banker, he's a very well-meaning banker. The kind of service that I got was very kind of anonymous service that didn't really understand the context of my business, which is important to me. Obviously, I'm just a small fish for a large bank, right? Now, the economics of this made it hard for banks to provide highly personalized service for the business banking segment and the commercial banking segment. Um, but I saw over the last couple of years, the economics can change with the advent of deep reasoning models. That was the
Mm.
aha moment. That is the stuff that banks have wanted to do that has been impossible for them, which is highly personalized service for business and commercial banking customers. We can do that now. So that was the aha moment that led us to start the company.
Yeah, no, definitely. So I come from investment banking also. We have portfolio managers. They typically don't have time to focus on everyone, even if someone who's lower on the portfolio AUM could have a better business because they don't have all the data and they don't have time to go gather that. So typically they focus on the top one or two revenue generating clients instead of focusing on everyone if someone else is a little bit more, long term growth oriented. So that makes sense. Definitely focusing on commercial banking, right? But you are also teaching product management while you're building a startup, right? So, what lessons from classroom have surprised you in the real world? Like we already spoke about how corporate work is slightly different from the startup work, but teaching product management and really building it in the real world for commercial banks. What do
That's
you think?
that's a great question, and in fact, I've been teaching a module in product management to the analytics program here at the University of Toronto for several years now, and
Hmm.
it's that interaction is actually really enriching. That's why I continue to do it year after year, despite everything else that's going on. And It's something that's really struck with me is um, when I started teaching this module, I actually baked generative AI was just becoming a force. It was just starting to, and I just plugged it straight into the curriculum. Right.
Mm.
I the final project for this module requires students to use the APIs that OpenAI, now they're actually able to use any other API. Use these to conceptualize a product and really apply product thinking there. And that how students, with a fresh pair of eyes, when they look at what's possible with the APIs that these foundation models make available, I'm constantly surprised and impressed with the projects and the products they come up with. But more than that, it's what I could see students do 3 4 years back is very different from what I'm seeing them do right now. With the same, which actually shows the trajectory of how how much more effective these models have gotten over the last 3 4 years, and also how people are starting to understand what's possible with them. And that you first, it's like a classroom is almost like this lab setting in which you can see, oh wow, there's a lot that you can do with it, and that informs the work that I do outside of the classroom as well.
Yeah, I mean, recently I've also been hearing that in earlier days, let's say just a couple of years back, you have a early stage startup, you raise funds to build products, you may have a MVP in place, but these days, early stage without a product in place is not going to work with investors because you have so much opportunity to do better product development before you raise funds from a venture capital or angel investor, right?
Yeah, you just need a
So
lot of money to spend on engineering now, to touch
yeah,
the
yeah,
concept that you did before.
yeah, no, exactly. A lot of changes in the last 2 years, more importantly, right? So, what has been the hardest decision you've made as a founder so far?
It's a road paved with hard decisions. So, um, thinking back about the past year, uh, the the hardest decisions have been where to focus, right? Because when you're early like we are, then the world is open with possibility, and there's just so much that we can build in any domain, right? So the finding the specific domain to focus in has been really hard, and it's been a difficult decision. Like, so for example, just in our area, there are like 3 or 4 different areas, right? So you have commercial banking, right? And commercial banking itself runs a whole spectrum from the large commercial banks on the one hand, to business banking, which are like often SMB banking on the other hand, right? So there's a whole
Yeah,
spectrum within commercial banking. There's a whole spectrum, right? Then you've got we did customer discovery with corporate banking, which is where you have often these banking relationships with publicly listed companies and large corporates, which they conceptually they look similar, right? They because they also have the same data, disparate data, complex organizational structures that need to be processed to find opportunities. So that's corporate banking, and then there is an adjacent space which is private credit, which is a space that we've been working on as well. And just the hardest thing is like where do you focus? And of course, we've made our and deciding on where to focus in our case, we decided to focus in the regional and community banking space because that's where we feel the problem is most acute. But that decision did not come easy.
I see. Now, because you are thinking about more priorities, right? Which one to do first? Obviously, many times founders receive conflicting advice. So, how do you get to decide which feedback to act on and which to ignore? Because, like how you see so many opportunities to expand, you get advice also in multiple directions.
At ERA, which is the incubator in New York that we were at this past winter, they called it the mentor whiplash. right? Which is like you have one meeting in which the mentor tells you one thing, and then you have another meeting in which the mentor tells you something completely different. So it's real. Who are my honest kind of thought there is that you know advice is only you as the founder know your exact context, right? and
Yeah,
and that's why advice should be taken more as a perspective, that the rather than as something prescriptive, because the prescriptive advice actually doesn't work. And within
yeah,
that, what I've observed is that the most relevant advice comes from potential buyers of your product, right? That's the advice that you pay attention to. People who work in the exact same jobs that we're targeting, as they might be buyers or they might be users. That advice is really valuable. That's the highest tier of advice. So I pay a lot of attention to that advice. And then the second after that, it's almost like a hierarchy of relevance. After that is the advice that comes uh, from founders and former founders, right? Because
yeah,
the kind of challenges that you face as a founder, only it's often someone who's working in a large corporate or who works in consulting. They can conceptually relate to it, but they actually don't know, right? I mean, not to disregard that advice. There's a valuable perspective to be shared there as well. But in the hierarchy of advice, I think customers come first, and then, in my opinion, are other founders, because they kind of go know the pain. They were once early stage founders themselves, and they know the pain that's involved.
yeah. No, exactly. I mean, you're right. Because sometimes the buyer gives advice that is more relevant. Maybe it will help you with a direct buying decision or an indirect buying decision, which is only going to help you grow because the goal is to grow. But the mentors obviously share their perspective,
Yeah,
right? Probably it's useful today, maybe it's useful in future, or maybe there is no context for you to immediately act on it.
exactly. Yeah.
Yeah, yeah, true, true. Now, with so much going on, what personal habit, discipline, or routine has helped you most during this entire startup journey?
I'd say it's a startup is like the ultimate kind of nemesis of habits and routine. So the personal routines and habits that I've had, they kind of go by the wayside. It's
Yeah,
but having said that, I'll tell you what I'm trying to the stuff that I'm kind of trying to retain. One is writing. Writing has been I like writing. I've written for a few major publications as a journalist, and writing is a superpower, and writing also takes a lot of time. So I'm constantly trying to set aside some space to read and to write, right? Which is something I enjoy, and it just and it's also it's these are energy intensive activities. Especially writing is quite an energy intensive activity. So I just make sure that I carve out some time. In my case, I'm not writing for publications right now, because the kind of time and rigor that's required to write for top tier publications is quite a lot. But at the very least, I'm writing in my own journal, just to make sure that I keep that muscle and the deep thinking that comes with it alive. But I do plan to start writing for publications again.
yeah. I mean, we've all heard, right? It's a more a marathon, not a sprint, which means the founder health is really also important. But also, it's not about focusing on health as one benefit. When you take your mind off on other routines like reading, writing, whatever that makes you feel better, the deep thinking, the critical thinking also comes with it, which can trigger some ideas for your startup as well, right? So that's
Yeah,
something, yeah,
I just think it's so beneficial,
yeah,
because both reading and writing, and by reading, I don't mean reading like short form posts on social media. It's like actual like long form reading and reading books, that really it's hard to get into it because our attention spans are obviously getting really challenged
Yeah.
with digital devices as they are. But carving time out is just beneficial on multiple perspectives, including you just come back the next day or later and you think about a problem in a new way because of something
Mm.
completely unrelated that you read. So it has productive, other than the fact that it's pleasurable once you actually immerse yourself in it, there are other advantages to it as well that apply to work.
Yeah. If you don't put it on calendar, it doesn't happen. So
It does.
carve out time, right?
Absolutely.
Yeah, yeah, definitely. So, if you could give one advice to your younger self before you started your entrepreneurial journey, what would it be?
You know the same caveat that I shared about the inapplicability of advice, that probably applies to any advice that I give to my younger self as well. But it's these are still early days for us. But
Mm,
I would say that um, it's good wherever possible to get design partnerships lined up before you take the plan. Sometimes it's hard, right? In enterprise settings, it's actually hard to line up design partnerships until you take the plunge full time. But
yeah,
one thing that's actually that we realized uh, is the importance of having a design partnerships, and and um, and how important it is to lock them in early in the process, right? Um, uh, if I were, the advice to my self from like a year back or 2 years back would be to lock in the design partnership to really validate whether the problem is acute enough, because people only sign the dotted line on a design partnership. There should be a contract involved, even if that's a $0 contract
yeah,
do that. And this is primarily if you're building for a space that is a that requires like enterprise style contracts. If you're building in a consumer space or in the SMB space, then it's different because you can just build it and test it out. But in the enterprise space, I feel like design partnerships from like the get go is the way to go.
yeah. I mean, enterprise takes long time before they make a decision. So, yeah, having these design contracts, even $0 ahead of
Yeah.
time, really validates for you and also gives them confidence to continue to move forward with your journey, right? Yeah. So you call Quantuma as deal intelligence,
Yeah.
right? So what does it mean? I mean, what problem exactly that the commercial banks, the tools that they have today, is not solving, and your deal intelligence is going to help them?
It's a that's a great question, and in particular, let me kind of frame it because it means there's a very specific meaning here. In commercial banks, there are deals, right? So, for example, every opportunity is essentially that a relationship manager works on is a deal, whether that deal is for like account opening for a commercial entity. It could be a line of credit. It could be a merchant acquiring opportunity. So the different types of deals that we have there. The problem right now is that these deals are highly reactive in commercial banks, right? So, for example,
Yeah,
you schedule like an annual review with a customer, and then that's when you put a lot of effort in to actually see what's happening with the customer, and based on what the customer tells you, you actually go in and have and position an opportunity or log an opportunity in the CRM, or the customer just reaches out to you when they need something. And but that by that time the customer's also reached out to like four other relationship managers, and then it becomes a very competitive situation.
yeah,
So, deal intelligence in this context means looking at the transactions, assuming we have the business has an operating account with us, looking at the transactions. We call this transaction intelligence because you're not just doing the transaction enrichment, you're actually looking at the cash flows of the business to understand what the business likely needs based on the cash flows, looking at the regulatory filings of the company, which actually tell there's a lot of insight that's there in the regulatory filings of a company, even for mid-sized businesses, and combining that with other information, that proprietary information that the bank has in their CRM, like call reports and other and last interactions, etc. So you combine these three data sets, the most important one being transaction intelligence, right? and then you reason through, based on what we know about the customer, what are the opportunities that are going to most resonate with them, what are their financial needs, and based on their
Yeah.
financial needs, what product or what solution can we provide as a bank that is going to meet their financial needs. And that becomes a deal, right? So you synthesize all this data, you identify that based on this company is growing, it likely needs a line of credit, or this company has a lot of different, we can see there's a lot of lending activity that this company has. Maybe we can consolidate the debt into a working capital solution. So these are the types of solutions that businesses need. But synthesizing all this whole context about what they need is the hard part, and it's been
Yeah.
extremely manual so far, and so manual in fact that it's never made sense to do this for the long tail of customers. For the top one or two, like for the top 10% of customers, they're well.
Yeah.
But what about everyone else? That's the problem we're solving.
Yeah, no, exactly. I mean, I couldn't agree more. But banks already complain that they have enormous amounts of data,
Yeah.
retail, commercial, investment, all of them, right? So, how quickly can we operationalize your solution? How can they, see missed revenue opportunities, transition, even small wins
Yeah.
with your solution?
So there are two parts of the solution. Part one is customer prospecting and customer acquisition, right? Which is the reason we designed that was to actually enable banks to start using it actively to get value. And that doesn't require deep integration into the bank systems. It's ready to go, right? It's just a couple of weeks to set them up on the prospecting part of our product. The transaction intelligence part, we've designed our interface specification and supported by integration agents that make it very easy for us um, to transform the bank's data to the structure that our product needs. And with this innovation, which again wasn't possible until fairly recently, it's the go live period for a bank is about 6 to 7 weeks, and that's with for transaction intelligence, which is a force multiplier in terms of giving visibility to a banker on what's actually happening with their customers. So both of these are designed to accelerate time to value. Previously, it would take a really long time. We talk about months to operationalize a product like this, but with the approach that we take, it's we've really compressed that time frame.
Yeah, I mean, quick time to market, but also showcasing value is more important than trying to build a solution that we don't know when it's going to give us some revenue opportunities,
That's
right?
right. Absolutely.
Yeah. And you also have something called deep reasoning AI. So, how is this different from traditional analytics that everyone is using?
It's deep reasoning AI works on top of traditional analytics. So, so the way
Mm.
so the way our system works is that we um, we compute the attributes that a banker needs to see to apply banker expertise, right? For example, a banker wants to see of the products that we have on the shelf, what are the products that this customer is using. They want to see what are the loan products that they're using, what are the balances, or in the case of a line of credit, what kind of utilizations have there been for a line of credit over the last X months. Similarly, on the
Yeah.
deposit side, they want to look at the balances and the transactions, etc. So all these metrics that a banker wants to see to understand what's happening with the customer, we've codified all of these into a semantic layer. Right, so a semantic layer is a set of metrics. It's an opinionated view on based on our interviews of a really large cross section of bankers from large banks and small, on what bankers should be seeing to understand their customers. Right. So all of this is codified in the semantic layer, and this is akin to traditional analytics, but there's a layer on top of that because traditional analytics pre-computes everything, and in our case, we've codified these definitions into a semantic layer. Then on top of that, what we do then is that we give our deep reasoning agents access to the semantic layer and all the context that surrounds it, for them to think about that. Now, for example, with this context, does the customer need an enhancement to their working capital solution? Do they need, is there an opportunity for us to capture the operating accounts that this customer has at another financial institution? So with this context, you make it available to agents, and then agents can reason through it to identify, hey, there is an opportunity here, and this is why you should talk to the customer, because it's a large opportunity and we've got a good shot at winning it. And that's deep reasoning.
Got it. And since we are on the topic of metrics, I really have to ask this, right? So, from an investor perspective, what metrics or milestones best demonstrate traction for your company? You also need to track some of these metrics and milestones for yourself, right?
Yeah. It's in the enterprise space. It's important and it's hard because the traditional metrics that you find in SMBs or the consumer space don't work so well, right? So, for
Yeah.
example, the typically you would have things like daily active users, monthly active users. Those actually, because the N is pretty small here when you're starting out, right? So you'd have a handful of financial institutions that you start working with, and then these when the n is too small, then the numbers that you actually gain from it are not that statistically significant, right? So the firstly, there's a caution on over indexing on metrics at an early stage company that serves the enterprise space because the n is too small, right? Now with that
Yeah.
caution notwithstanding, it's still important to look at the metrics, and what we look at are how many financial institutions are using the product. Have you deployed into? How many of them are actually using the product? And just studying the users, whether when they're logging in, how frequently are they logging in? Are there any other if they're not logging in that frequently, then is there an opportunity for you to push the data somewhere else to an application that they actually use, like a Salesforce, for example? Would that make it more effective? So it revolves around usage. These are the most important ones. Are people actually using it? But we just, at the early stages, a lot of it relies on connecting the dots through interviews and talking to customers rather than relying just on the metrics, because the end is too small.
Yeah, exactly. And so that's from an investor perspective for you as a company. But when you're trying to sell into banks, what matters more? Is it technology, trust, or measurable business outcomes, also known as metrics? And you spoke about design partnerships a little bit earlier. Tell us a little bit more about that. I mean, what does that mean? Typically, to get that, you need to have more trust, but then they also need to see better metrics, right? So, how do you balance that?
So the selling into regulated industries is actually really hard, right?
Yeah.
And it's not so much about technology anymore. Maybe at some point it was, maybe to some degree, people like to think it is, but it really is about relationships, right? The whole migration of value has is going away from technology into relationships and into distribution advantages, right? So that's more important than technology. That's more important than metrics, right? Because it's a precursor to all those things. And once you have the trusted relationships which you might have from prior work that you've done, it might be partnerships that you strike with distribution partners. Then the rest of it just follows from there, including some proof points on what the business case is. In terms of, in our case, in our world, the business case is a very financial business case. What cost can be saved by helping the relationship managers be more efficient at what they do? Like, you can cover a larger number of customers much more effectively. And then the second is a deposit growth and loan growth, right? This is what the business case is anchored on. Once we establish the relationship of trust and expertise, then the second is obviously the business case. And technology almost doesn't matter, right? In Outside of innovation groups, technology almost doesn't matter.
Yeah, exactly. I mean, technology could be different a little later in
Yeah.
few years. Like, Couple of years back, I mean, AI has been around for so long, but there is so much focus in the last couple of years. Who knows what's coming up on the trend line, right, in the next few
Yeah,
years?
absolutely.
Now, we spoke a lot about customer value and customer signals. When you were building Quantuma, what early customer signal convinced you that you have real product market fit potential?
It was just customer interviews. When we
Mm.
did customer interviews, especially among mid-sized financial institutions, large relationship managers and product managers at large financial institutions also validated what we're doing. But then they had
Mm.
a lot of internal initiatives that they were trying to do to make success, because banks are not great at product development, especially large banks. But they had like in internal initiatives that they had in place. But when we spoke with mid-sized banks, not only did they validate, and small, community banks and regional banks, not only did they validate the pain point, they also validated like the underlying business pressures that they're facing, right? Because community banks and regional banks are getting squeezed between fintechs and large banks, and that's creating pressure on deposits. That's creating pressure on loan growth. So when you so that when you look at this, when they spoke of this, the pressure on the business outcomes, and it actually became apparent that there's something high value that we're working on, and those early conversations with customers in this segment gave us the conviction that that's the right thing to do.
Yeah, I mean, customer interviews, customer feedback really kind of shapes that up, right?
Absolutely.
Now, looking ahead, let's say 5 years from now, how do you think AI will change the role of relationship managers who you are more focused on, commercial bankers, or even financial institutions in general?
On the one hand, the future is unknowable. Who knows what happens in 5 years, especially these days. But it
Yeah,
it does feel like there's a trajectory shaping up, and because if we look at, yeah, we can look at what's happening in software and SaaS companies that sell to other businesses, within the B2B SaaS companies. We can see what's happening in that space to see what the future of relationship management in banks would look like. Because banks lag several years behind the kind of tooling, technology, and enablement that's already been available to software companies, more progressive software companies, for a long time. And so this is, so in a sense we can actually see what was likely to happen, and a few things actually are quite likely, given that they're already happening in software. The first is that the value of human relationships is going to go up, right?
yeah, mhm,
So this is a polar opposite of the AI BDR kind of drive that a number of companies in the software BDR space have been promoting. It's AI BDRs are not that are, broadly speaking, not that effective, especially in products that require trust, right? So it's actually, people are turning to human expertise. That all these saturation of outbound is is at a point in which you just pick up the phone or answer an email when you know the person
yeah,
on the other side. So this is, I think, human relationships are going to become more important, right? That's one. And then the second thing is that those humans are going to become dramatically more effective at their jobs, right? So the ones that are able to use the kind of tooling that we're building, and other and our contemporaries in different industries, the relationship managers who are able to productively use these capabilities are going to be like dramatically more effective than everybody else. And that's these are the two kind of observations that I'm fairly confident is going to pan out in the next 5 years in this space.
yeah. I mean, I couldn't agree more. There was a lot of chaos last year, I would say, that AI is replacing people. But this year, I think we've gone back, kind of settled in the middle. It's only going to enhance human efficiency, but more importantly, also now the way that humans do things is becoming more precious,
Yeah.
for lack of a better word, right? Because that's something that we cannot automate 100% overnight. So
It,
there's more value in human relationships.
there's just more, and it's like relationship manager is relationship is literally in the name of the job title, in the job title, right?
Yeah,
So it's just this role is just going to become more important, and also it's the bar for who does this job well is also going to go up, right? Because it's not a job that's about paperwork and admin. It's really a job about building warm, deep relationships. And building those warm, deep relationships obviously requires authenticity, but it also requires a genuine understanding of your client. And that's where the data and the insights that we're building come in.
yeah. And in your case, if there are two relationship managers, one has your tool, the other one does not have your tool, how efficiently are they able to do their job, but still be a relationship manager, right? Not
Yeah,
doing something
yeah.
else.
Because in one case where they have technology like Quantuma, they're just
Hmm.
much more prepared for the con. The two things differently that happen. Firstly, there's an opportunity there. There's a signal that this customer's at an inflection point in terms of their financial needs, and you can talk to that customer before everyone else. So there's a signal, and then accompanying that signal is deep intelligence on who the customer is, why this opportunity is relevant, and what you should say to that customer. So this is with the Quantuma technology. Without the Quantuma technology, you don't even know the signal, so you just talk to the customer at the end of the year. And when you do meet the customer, then you spend like 2 weeks trying to synthesize like a meeting brief, and even then you'll probably miss on you'll only find out about this opportunity when the customer asks for it, right? So there's a gap between these two segments that'll open up, and we're going to see this play out.
Yeah, and it's going to be a lost opportunity not only for the relationship manager, but also for the customer who's in need of some of your products and services, right? And they are not able to get access to that.
Especially in the SMB space, because in the SMB space, because mid-market companies have CFOs and they have sophisticated financial managers. But in the SMB space, these are often small teams. They might have
Yeah,
like a financial admin at an SMB, but nothing more than that. And they need the advice, right? And this is the role of the relationship banker.
yeah, yeah, exactly. And since you're playing in the regulatory space, I mean, how often do you keep up to date with your product, and does it matter when the regulation changes? Every day these days it changes. So, how do you keep up with that and still continue to work with your clients to provide the best service?
We keep track of the progress in the regulatory space, but it's in our case, most of the regulations that are there right now, that are in effect right now, are primarily targeted for consumers, right? They're That's where the central thrust of regulations is, and they're primarily on the credit side, right? Because you want to be fair when you're actually making credit decisions. So yes, there is AI regulation that are in the works. There's regulation around privacy and security, which we keep a close eye on. But so far, it's not a major time sink for us. We just know the regulations that we just keep an eye on it, and if there's something relevant, then we act on it ASAP.
Got it, got it. I mean, we are kind of almost coming up time. Is there anything else you want to share with our audience? It's startups, investors, and operators in our community.
Um, the just it just makes a lot of sense to be hands on right now, right? So it's it's just possible to do so much more than what was possible last year, or definitely 2 years back. But all of it requires being hands on and not being a manager, right? So that's the
Yeah,
that's the one thing that's like super exciting, being like effectively an individual contributor. And that's where I think there's a lot of satisfaction and impact that comes with being hands-on and almost being an individual contributor again. Um, and it was hard to do until recently, but now it unlocks new possibilities.
Yeah, I mean, really takes that individual contributor's efficiency to a new level of productivity, right? Just by adding some of the tools that could be at their disposal.
Absolutely.
Yeah, no, thank you. How can people get in touch with you? Is there anything that you're looking for at the moment? What is something you're looking for your startup at the moment?
Well, we're always happy to have conversations with interesting people, and just the best way is LinkedIn. They connect with me, and I'd love to have a chat.
All right. Thank you, Adnan. Thanks for taking time and hope to stay in touch. Good luck with everything.
Thanks a lot. Thanks for having me on the show.
Thanks everyone for joining us. And again, if you're a fintech, tech, AI, or sustainability focused startup, do check out our next fundraising event happening for New York Climate Week. It's on September 18th. Thanks everyone for joining, and thank you, Adnan, again.
Thank you.